Welcome back. In our top business story, Dubai's business confidence jumped in the third quarter as workers returned back to the Emirates. Dubai's confidence level rose from 100 points in the second quarter to 115 points in Q3, off the back of growth in non-oil sectors. That's according to the Dun & Bradstreet Business Confidence Index conducted for the Department of Economic Development, which surveys around 500 local companies across a number of sectors. 57% of those surveyed expect to see higher profits in Q4, while 30% forecast stable sales. And 42% of the businesses stated that they were looking to upgrade their technical systems. RTA, Emirates NBD and Visa have joined forces to create a credit card with a direct connection to the RTA and SALIC payment systems. The Visa-branded Go For It card, which was unveiled today, incorporates an auto top-up feature enabling cardholders to automatically top up their NOL and SALIC accounts. This gives the commuters in Dubai the convenience of two cards in one, as it can also be used as a normal credit card. The initiative for the new card comes from market research indicating customers are interested in security and convenience whilst using the RTA network.
What will be unique about this card? The card caters for both segments of users, private cars owners as well as public transport users, where it will have a features of auto top-up for their SALIC account as well as a auto top-up feature for their NOL account.
Such card exists in other parts of the world like in London and Singapore, etc. But in this Middle East, this is the first application which has got the transport application in the card. And from a Visa point of view also, this is first in the world.
Stock markets here in the UAE were up today following the Asian market's strong rally this morning, and also most of the GCC markets ended on a higher note. Here's a quick overview. Last week, the euro saw its lowest weekly close against the US dollar since January. We have Gaurav Kashyap, head of DGCX trading at Al Pari Middle East DMCC, here with us to talk about this issue. Welcome, Gaurav.
Thanks, Linda.
We saw a strong rebound in the euro today. Why was that?
Well, Linda, this is a combination of a couple of different factors. First and foremost, we had a very, very strong retail turnout on Black Friday in the US, which saw sales increase 6.6% year on year over from last year's reading. So the strong retail participation on that front boosted a bit of risk sentiment. And of course, we had the two reports from Europe over the weekend. First, La Stampa's unconfirmed reports that the IMF was gearing up for a 600 billion euro fund bailout for Italy. And this, of course, was followed by another report from a German newspaper, which showed that France and Germany were, working together at a bilateral pact to rein in budgetary measures so the ECB would be more incentivized to purchase government bonds. So this news saw the euro increasing a lot higher across the board. We saw the markets gap higher towards 133.50 against the US dollar. We've seen commodity markets also increase on the news. Basically, what we're seeing now on this Monday is a very newfound risk appetite.
Let's turn our attention to the US. We have on Friday the US non-farm payrolls data out. What are your expectations?
Well, Linda, analysts are currently forecasting for new gains of about 120,000 jobs. This is up from about 80,000 during last month's reading. We're going to be paying attention to the private payroll number, which is expected to increase to 145,000 new jobs. Once again, we're going to have to see very sustainable jobs growth in this region or higher to see risk sentiment continue building on the good economic data coming from the US. Any figure below that, and we will see the US dollar rallying very heavily once again against the euro. Overall, along with this data, we're also going to be paying attention to the ISM manufacturing index from the US on Thursday. And of course, we have a lot of bond auctions from Europe, as well as the European FinMin meetings, which are taking place in Brussels. Overall, we look for opportunities in the euro between 136 and 137 to sell, of course, with a target of about 130, 150, followed by 130.